Hey everybody, Rob Maurer here, and today we are going to be talking about BYD's annual report for 2022. They've just posted that, so we'll take a look at how that compares with some of Tesla's numbers for the year. We've also got an interesting update from the UAW, some comments ahead of their negotiations later on this year, and some news from Drew, SVP of Powertrain and Engineering at Tesla, on Tesla batteries. All right, looking at the stock, Tesla kind of continuing to follow the market around a little bit, up 2.5% on the day today, closing at $193.88. while the Nasdaq up 1.8% on the day. We do have a couple of analyst updates. First from Alex Potter of Piper Sandler, still a $300 price target on Tesla stock and an overweight rating. Just basically walking through how they expect Q1 to come in. 440,000 deliveries is their expectation. It's a little bit higher than consensus. And they just were walking through some of the things that they have seen this quarter in terms of how they expect the order rate to come in. Obviously not something that Tesla publishes, but we've seen how the backlog for Tesla vehicles based on wait times has dropped over the last few quarters. And now it's risen a little bit through this quarter. So they're in this chart here looking at sort of this book to bill ratio, which we've talked about in the past, being above 1 for the first time in a while this quarter, meaning more orders than Tesla is able to fulfill based on Piper Sandler's estimates. So kind of walking through some of those things. And then Baird also with an updated note today, reiterating a overweight rating on Tesla as well, a $252 price target. They actually have deliveries down at 403,000 for the quarter. So even with lower expectations there and lower expectations for the year at just 1.7 million, they are still expecting, or they still have a $252 price target on the stock. So even with a wide range of expectations, you can still end up in a pretty bullish spot based on these analyst estimates. And then we do also have sort of a stock-related thing here, an updated Form 4, always a little bit traumatic to get those these days. This is from Drew, though, Drew Baglino again. This is just normal selling as a part of his compensation. We can see that this transaction was actually put in place back on November 1st, 2021. So about a year and a half ago, this trade was put in place. So nothing to worry about on that Form 4. Speaking of Drew, though, we do have some interesting comments from him at the 40th Annual International Battery Summit. Shirley Meng posting some takeaways from her conversation with Drew at this so-called fireside chat at this event. So pretty quick here, just 4 questions that she kind of recapped Drew's responses to. First was really how to explain to people the importance of dry battery electrode. Of course, something that we've talked a lot about, Tesla has talked a lot about, especially coming off of Investor Day. But really, he just highlighted that it's really about manufacturing at scale, reducing site footprint, labor costs, CapEx. They believe they can reduce those things by a factor of 3 with just the dry processing step or dry processing process. And they also said that when they're trying to scale as fast as possible, this allows them to scale much more quickly. Again, a factor of 2 to 3 enhancement in manufacturing speed being possible from dry battery electrode. He also talked about how single-digit % changes in yield matter a lot more now as metal prices have gone up. Obviously, that's stabilized a little bit here over the last few weeks, but the yield, even in those single-digit percentages, at the scale that Tesla is starting to get to, can make a pretty significant difference. The next comment, just kind of about some of the things from Investor Day, the ambitious targets to transition basically the world economy to sustainable energy. Talked about some of the things that Tesla's familiar with, such as EVs, being very familiar with those. I thought his comments on heat pumps here were a little bit interesting, as Shirley Meng recapped it, saying some heat pumps were sort of in a category that Tesla views as making progress on. Of course, that could relate to what they've done with vehicles, but just kind of interesting to see it phrased in that way, relating to home heating. And then some that they're just not sure about, some categories they're not sure about, such as high temperature industries, with steel and fertilizer, which of course Tesla talked about some plans in that space as well. And then sort of the last poignant thing here, talking about just the role of recycling in this eventual sustainable economy, talking about how really it's possible to get there with sort of current technologies, just increasing the speed and yield of manufacturing. Dry battery electrodes allows for a lot of that, as Drew talked about. And then solving the supply chain, recycling is going to be very important as battery production grows. So cathode materials always been very important. You need to look at this from both a mining raw material side as well as the recycling side. Mentioning 95% of these elements can be recycled today, 95% plus. And it's important to remember that the battery-enabled energy infrastructure, things are recyclable at scale. So unlike with CO2-based economy right now, or the fossil fuel-based economy, a lot of that CO2 escaping, that's not the case with sustainable energy economy. So a lot of stuff that we know, but kind of interesting to hear those thoughts recapped from Drew and from Shirley. So appreciate her sharing that. And then moving into BYD's earnings, I think these are super fascinating to focus on as BYD had a really, really strong year in 2022. So we get to take a look at the financials, something that we probably haven't talked quite enough about. So I do want to spend more time on this, but right now let's just go through the 2022 annual report. Long document here, so we'll probably come back to some of these items, but it's like 300 pages. But we can see from income statement, cash flow, just trying to summarize some of these things in a little bit more of a simple way here. For 2022, BYD's revenue converted over to US dollars, obviously in billions here. They did $61.6 billion in revenue. That was up 96% year over year. 47.2% or 47.2 billion of that rather, about 76% was automotive revenue. They have a few other business lines as well. This would include batteries. And then gross profit, $10.5 billion. That's about 17% gross margin. And then $2.4 billion of net income. That was up from $400 million last year. So a 450% increase. But at the end of the day, still a pretty small net margin, 3.9% net margin, which was only a 250 basis point increase year over year. So we'll come back to a couple of those numbers, but just to compare to Tesla, Tesla's about $20 billion higher in revenue, about $24 billion higher in automotive revenue specifically, gross profit about $11 billion more, gross margins, 850 basis points higher, and net income significantly higher, about 6 times more at $14 billion. And then the net margin, you can see there, 17.3%. And Tesla actually grew their net margin year over year more significantly than BYD, despite BYD having stronger growth in total revenue and in specifically automotive revenue. So like I said, really strong year for BYD, especially in that automotive growth line. That 152% increase, that represents a $28 billion increase year over year, versus if we look at the 51% increase for Tesla, it's only $24 billion. So not only did the percentage grow faster for BYD, but the top line sheer total volume did grow faster as well, even from a smaller base. So definitely an accomplishment to be proud of for BYD. They did improve their gross margin more significantly than Tesla did, up to 17% from 13% last year. But what I think is really fascinating here is this net income difference, where on 10 billion of gross profit, they're doing 2.4 billion of net income. You've got about an $8 billion gap there. Versus if we look at Tesla on $21 billion of gross profit, and that's trickling down to about $14 billion of net income. So a little bit less than $7 billion difference there for Tesla. So sort of the waterfall down from gross profit to net income, there's already an $8 billion gap for BYD on a smaller base versus a $7 billion gap for Tesla on a larger base, which suggests that Tesla has some pretty significant advantages from an operational efficiency type of perspective. So we heard last quarter Zach talk about how operating margin is sort of their focus moving forward rather than gross margin. And this is a big part of why that is. If you compare the gross margins, things look a little bit closer. You've only got a 8.5% difference here, but if you're looking at net margins, that difference grows to, 13%. So pretty significant difference between those two. And again, you see this gross margin increase not really making its way down to the bottom line for BYD. Now, part of that you can say, okay, that's probably because BYD scaled so aggressively in 2022. And that's true. That definitely adds costs. And it'll be interesting to see how that ends up affecting their numbers for 2023. There may have been expenditures that they find efficiencies with this year that makes that comparison look a lot different as we move forward. So as BYD reports their quarterly results this year, we'll definitely be keeping a close eye on that and come back to these comparisons and see how this gap is changing. I do think that the gap closed a little bit in Q4. It's going to take me a little bit more time to sort of extract these Q4 numbers. I think I had to go through the annual report and subtract out the year-to-date for Q3, so it just took a little bit longer. Didn't quite have time to get fully through that today. But hopefully we'll get there and just sort of compare how these numbers progress over time. It's going to be fascinating here in Q1, as we have talked about, where BYD's sales so far in China are running down from Q4 versus Tesla, pardon me, obviously increasing from Q4 last year in China. So we'll keep an eye on BYD. They did talk about how their increase in gross profit was mainly attributable to the increase in new energy vehicles. So that's really what's driving that gross margin up for BYD. And then just one other item that I did find interesting in their report. They did talk about how they did disclose rather their revenue breakdown by location of customers. So basically China, Macau, and Taiwan, and Hong Kong there, they've got 78% of their revenue coming from those areas versus just 22% in 2022 coming from overseas. That was actually 30% overseas last year. So with this increase in revenue, with this increase in gross profit, a lot of that is being driven by growth in China, driven by growth in the new energy vehicle business. And it'll be interesting, going back to the trend that we see here in Q1, how that changes going forward. Is BYD sort of getting to a point where they're a little bit more saturated in the market, where this growth becomes more difficult? Have they sort of, taken that step change, and then are they going to stall out a little bit? We've definitely seen years in Tesla's history where they have that huge growth, and then it's followed by a year of a little bit slower growth until they sort of get to the next thing. So it'll be interesting to see if BYD's kind of at that point, or if there's still more room to grow, and how that carries forward through what seems to be a little bit tougher of a climate this year for 2023. They also did say, a little bit comforting to Tesla, that they have no plans to challenge Tesla in the US anytime soon as a part of their earnings update. So I think that's welcome news. I think it would be a tricky slope right now, especially with the sort of net margins, again, that they're working with. And those net margins probably already being a little bit under pressure. Plus, we're just seeing, their numbers here so dependent on China right now. That's a completely different story once they start to expand beyond China. I know we focus a lot on that, but the battleground is certainly different once they move beyond that region. So a lot of interesting things happening with BYD to watch going forward. All right, moving on. We do have an update here from Tesla on the EV tax credit. We're just a couple of days away, still waiting for IRS and Treasury updates on how this tax credit, how these guidelines are going to shake out. But Tesla has updated the language on their site saying that the $7,500 the $7,500 tax credit is anticipated to be reduced by Model 3 or for Model 3 by March 31st. And if we click on the Learn More thing there, it talks about how it's eligible. Their vehicles are eligible for a tax credit up to $7,500, but the $7,500 credit is anticipated to be reduced for the Model 3 rear-wheel drive by March 31st, 2023. So this matches up with the Electrek article that we had talked about a week or two ago, where apparently Tesla was telling employees that this was going to be the case for the rear-wheel drive specifically. Obviously, those are lithium iron phosphate cells that are produced in China. So not surprising, as we talked about before, but hopefully, since it is specifying this in such, specific detail, sorry to be redundant there, but because it is specifying this, hopefully that means for the other vehicles, the other trims, that Tesla doesn't expect that to be the case. If this full $7,500 tax credit carries forward for those vehicles, I think that would be a huge win for Tesla. So we'll see. Again, just a couple of days left before hopefully we get more guidance on that. I don't know why it's taking this long. It should have been in December. All right, we do have an update here on Giga Mexico. So this is from the Secretary of Foreign Relations in Mexico, talking about how some government members and part of Tesla team went out and toured the site, the location for Giga Mexico. So just some photos and some videos taken from their sort of expedition out to that location. So kind of fun to see that, and hopefully that gives way to some progress for permitting and things like that for Tesla to get started with Giga Mexico. And then the last couple of things we've got here, an interesting update from the UAW. This is a story from the Detroit News a little bit earlier this week, and some interesting quotes from the vice president and the president of the UAW. Obviously, we talked before about how negotiations are coming up with the UAW and automakers like GM, Ford, and Stellantis later this year. But some aggressive quotes here. So their vice president talking about, quote, "When will we quit letting them rip our hands apart knuckle by knuckle, ball our fist, and punch them in the mouth? We have to start punching back," end quote. Speaking, of course, about their negotiations with these automakers, which that's already pretty aggressive. And then we look at the comments from the UAW president. He's saying that the members of the UAW should view the employers, these automakers, as the union's quote-unquote one true enemy, end quote. So it's, again, very aggressive. I don't know that that's the healthiest stance to have for the partner in this relationship, in these negotiations. That would be the employer, viewing them as the one true enemy. I don't know that that's a healthy sort of point of view to foster among employees. It's interesting, and imagine, if the employer had that same perspective where they viewed their employees as sort of their one true enemy, as the counterparty here. It's just an interesting positioning. Obviously, this is, heading into negotiations, and you've got to sort of have a tough stance in those negotiations. But again, it just sort of, I think, fosters an environment of, resentment and not positive feelings towards an employer when this is the sort of rhetoric that is being driven by the employee or the employment group. So I thought that was interesting to see. But moving on from that, we do have an update from Kia on the EV9. We talked previously about the upcoming expectations for this. They have now released some of the full specs on this. So they say they're targeting a range of 541 kilometers on the WLTP test cycle. So this would be a little bit below Model X range. That'd be about 336 miles, but again, WLTP. So real world, probably a little bit lower than that. They say that they're going to be offering pre-orders for the South Korean market in the second quarter of 2023, expanding from that in the second half of the year. And then in terms of some of the other specs, like speed or acceleration, they do say that they'll have trims ranging from 9.4 seconds 0 to 60 or 0 to 100 kilometers per hour down to about 5.3 seconds at the top of the line. They're going to have a couple of battery pack offerings at 76 kilowatt hours and 100 kilowatt hours. So it's going to span a pretty broad range. I don't think we have the specs for the range on the lower end of the vehicles. That 300 plus mile range obviously would be coming from the higher battery pack option. But we should be learning a little bit more about this later this year. And then, of course, they talk about conditional level 3 autonomy. So kind of what we have seen from Mercedes that we've talked about. This would probably be in a very limited scope, very specific use cases. And they say that that would be coming in the future for some trims of the vehicle. So we'll start to see a little bit more of that. Not that that's a bad thing, but it will be interesting to kind of see how those operational driving domains expand over time. And then finally for today, just an update from Elon. He has signed a letter pushing for a pause on giant AI experiments that are capable or more capable than GPT-4. So we've seen Elon express his concerns about this. That was part of his original involvement with OpenAI years ago. And he did confirm that he signed this on Twitter saying that leading AGI developers will not heed this warning, but at least it was said. So a lot going on in that space, probably something that we'll talk more about over time. But interesting to see, Elon making a little bit more of a formalized effort to sort of pause progress on that. Like he says here, I don't think that that's something that's going to happen. If you pause, others are probably just going to take it up. So Elon has argued a lot for regulation. It's probably a little bit tough to see that happening in a short period of time. So we'll see on that, but that is it for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the, I think, Thursday, March 30th episode of Tesla Daily. Thank you.